G'day fools, Scott Phillips here, the Motley Fool's Chief Investment Officer. I don't really feel like being here right now. It's a really tough time to be talking about finance when we think about what's happening in Ukraine, in Europe. It's a tough time to imagine that one country is being invaded by another and that the people of that country are now facing an uncertain future. It's hard to think that finance is important in that context, and yet we're a finance company. I'm a financial advisor, and our readers and members turn to us for financial advice. I probably don't need to tell you the market's down about 3% as I record this at about 3:30 on Thursday afternoon. Fools, it's a tough time for everybody for all sorts of different reasons, but I'm going to focus on the finance part because, as I said, that's what we're here to do. It's really tempting right now to feel like the world is a bit out of control, and the easiest thing to do is just simply pull out. Take everything out, walk away, wait for things to calm down. I understand that intent. I understand that feeling when the market's down a lot, and it's been down a lot over the past couple of weeks, maybe even a couple of months. The blows seem to keep on coming, don't they? And today we're seeing, as I said, big falls on the market of over 3%, at least at the time of recording. I don't know what happens next. Neither do you, nor does anybody else. I've said before, I'll say again, when people make predictions, if they honestly think they know, they're either lying to you or lying to themselves or both. We can't know what's coming next, particularly in the short term. In the short term, share prices are influenced not by market fundamentals, not by business fundamentals, but by sheer sentiment. And right now that sentiment is fear, it is uncertainty, it is concern. At a very personal level, I understand those feelings. At a professional level, at a financial level, this is the time to not lose our nerve. Now, at the Motley Fool, we don't manage your money. So this is not us saying, please don't take your money away from the Motley Fool. This is me saying, hopefully to you, fellow investors, as I would say and have said to my family and friends, now is not the time to go running for the hills. If you've heard me talk or read anything I've written in the past little while, you know my message has always been that the market tends to go higher over time, despite, not in the absence of, these sorts of things. Whether it's the COVID crisis, whether it's the GFC, whether it's concerns about China and a hard landing, as was the case, whether it's Brexit or Grexit, whether it's the Asian financial crisis or any one of a number of economic or geopolitical crises over the past 10, 20, 30, 50, 100 years, the market has continued with pullbacks to march higher. I don't know how long this current market fear lasts. I can't tell you. I don't know. So what I'll tell you instead is what I'm doing. I have $43.84 left in my investing account, in my savings account. You know why? Everything else is in shares. Every single dollar of investment cash, investment assets I own, other than that $43.84, maybe a little bit in super as well, is in the market right now. That means today hurts. It hurts a lot. I'm down a lot, can I tell you? It hurts. But what I know is that over time to this point, the market has never yet failed to regain, then surpass previous highs. Unless that changes for the first time in recorded history, then we have brighter times ahead. And when we get to those brighter times, when we get to those new market highs, I will have wanted, looking back, every possible dollar I had to invest to be invested in the market so that I can maximize the value of that coming market high. What does that mean? It means that you're going to have to put up with short-term volatility. I would love to have a crystal ball. If I did, I would have sold yesterday and bought everything again this afternoon. I don't get that luxury, neither do you. What I can do is say my investment horizon is measured in decades. And if I think in a couple of decades' time, I expect the market to be much, much, much higher than it is today. If that's true, I will have wanted as much money as possible invested today, yesterday, and tomorrow. I want to take full advantage of those gains. If you're a sailor, you know the wind's coming, you want as much sail as possible exposed to those winds to make sure you have the opportunity to take advantage of the gains when they come. So that's what I'm doing as an investor. I wish, I would like to believe in a world without market volatility, but it doesn't exist. The choice we have is to endure it and make, hopefully, what I expect to be, based on history, meaningful, very meaningful gains in future, or avoid it and miss out on the chance to make those gains. Over the last 30 years, Vanguard tells us that a hypothetical $10,000 investment in shares in 1991 became the best part of $160,000 30 years later. 10 to 160. Now, over that 30-year period, we had the end of the Australian recession. We had the dot-com crash. We had Brexit. We had the fears about Grexit. We had terrorist attacks. We had the GFC. We had the COVID crisis and recovery. And the market put on gains that approximated about 9.6% per annum, which turned 10 grand into 160 grand over 30 years. All you had to do was not panic, to live through those volatile moments, to endure that volatility and come out the other side invested, letting the market do its thing. Now, again, I can't promise you the future is going to look like the past, but I think it's a brave person who bets against that being the case. And I don't know what happens in the next day or week or month or even year. I have no idea. No one can tell you. Again, if they're telling you they know, they're lying to you or lying to themselves or both. What I know is I'm going to remain fully invested, good Lord willing and circumstances allowing, right through that period. In fact, I can't wait for my next pay. My next pay hits in a couple of days' time, and I'm going to take my usual investment dollars out of that pay straight away and put it straight in the market. Multi-field trading rules notwithstanding, of course. If I can, I will. But because I think the market's going to go up straight away? No. Because I think it's probable? No. No idea. All I know is if I can take $1 and put it in the market today, that dollar is going to be worth a whole lot more 5, 10, 15, 20, 25, 30 years from now. That is my expectation. That's why we invest in the first place, because we believe in the power of democratic capitalism and the companies that flourish under that system. So that's what I'm going to be doing. I know investing right now is tough. I know sometimes you just want the pain to stop. I absolutely get it. As I said, I'm having the same sentiment, same feeling myself. I'm not immune to those, by the way. The difference is I've simply learned to accept and endure them for the brighter days that I think are ahead. I hope they are. I hope they are for the people of Ukraine as well. In the meantime, let's stick with it full on.